Hello, good morning. Time to decode the ET Wealth newspaper and let's talk something really interesting today. It is scaring a lot of us, and that's the recession. It's occurring to us that recession is coming and how will we deal with this situation. So today the decoding is exactly on that. It's called Rules of Surviving a Recession. So that's the conversation for today. Hi Veena, good morning, welcome, and welcome to everybody who's joining in. So this article is on page number 11 and I'm not paid by ET to do this decoding. I benefit from reading the Economic Times and the ET Wealth newspaper, and so I recommend it to everybody. So today, before we talk about how to survive a recession, there's an article in the Economic Times paper today where our finance minister, she said, Nirmala Sitharaman, she said that there is absolutely zero probability of India slipping into recession. So she's completely ruled out that we are headed for an inflation. And still, we don't know the future. So as wealth creators, as people who are committed to the critical financial goals, achievement of the critical financial goals in our lives, we will talk about certain rules to surviving a recession. The recession may come, not come. Yeah, recession is nothing, it's a slowdown. Economy slowing down. The growth in the economy slowing down. So, yeah, well, our finance minister of the view it ain't happening, but in case this happens, how do we deal with it? So today we're going to talk about the 10 rules that Uma Shashikant, who is the chairperson of Center for Investment Education and Learning, so we are going to read and decode these 10 rules that she's written on surviving recession. And before I jump in there, let me welcome my people. Hi Shruti, Shelly, Abha, Prerna, Preeti, Kavneet, welcome. Warm welcome. Hey Hinal, hi, welcome. So let's begin. Rule number 1 to survive recession. Prepare for the risk to your regular income. So the degree of the impact on your income, it may vary depending on the sector that you work in, the strength of the firm that you work for, the elasticity of the demand of your goods and services, and many other factors which may realistically impact your income. It may also mean low increment or no increment, cut in pay, cut in job role, loss of job. So it could be any of these, right? Anything. So there is risk involved, right? And what we need to make sure is we are prepared for the risk. That's critical. The second rule to surviving a recession, and that is, do not try to make investment decisions that you risk considering as smart. This is not a time to speculate on the dollar, oil, gold. You will risk buying at the top and holding on through a slump and make yourself no money. During a recession, businesses do not make capital. They do not make capital investment decisions. So nor should you. So do not buy real estate because someone told you that the property will never lose value. Be aware that many assets are inflated. They have risen in value when demand is high, and interest rates are low right now and will fall steeply with those conditions when those conditions reverse. So yeah, she's saying do not do investments which you consider risky or smart. Well, I have a different view on that. I really think you should invest in recession. I mean, you should have already, if you're following Women on Wealth, you've done our courses, then you have a complete portfolio investment portfolio that you've built, and recession will give you an opportunity to really pick businesses, mutual funds at rates lower than the average maybe, or just lower prices comparatively. So I think, if you've already built a portfolio, then it will give you an opportunity to buy more. That's what I would say. Like, it will be sale time if truly what is being feared about comes true. Third is, business failure is common occurrence in a recession. So businesses may fail, but which businesses will fail? Only the weaker ones. Yeah. So weak businesses at a higher risk, and new weaknesses will show up as the situation gets worse. Do not speculate on stocks. So there is a step-by-step methodology to pick good quality stocks. All of you who've done the stock investing course with us have used the methodology. You've already picked good quality stocks. Now your job is to just keep investing in them. No looking for penny stocks, any new stocks, no. You have built a portfolio that's strong enough. Now you need to just keep investing in it. So yeah, keep your money off the IPOs. So no IPOs, no penny stocks, no NFOs, nothing. Okay, do not fall for all these fads. Do not start a new business yourself. It's not the time to try entrepreneurship, is what she is saying, though I really think it is the startup time in India. And whether it is recession or a good time, if you have the passion, you have the commitment, and the business solves a customer's problem. See, any business which will not solve a customer's problem ain't going to do well. Whether it's a large business, it's a small business, whatever it may be. So that's another point I don't agree with Uma with. I really think anybody who's understood her target audience, and there is a real problem that you are solving for the target audience, and the target audience is willing to pay a price to get the solution to that problem, you have a business. Recession or no recession, you have a business, and people who have the pain point will pay you in recession or in the growth phase. Fifth point, she's saying, do not sell your stocks and property in panic. Absolutely. That's an attitude thing, right? So you got to build an attitude where you can persist with your investments. Persistence is the key. Anybody who has picked good quality investments and you keep investing, right? You keep growing your money by just being there. You do not invest more, but you just persist there. Like, I do not invest more now, like really, but I just persist with my investments. Now that helps you multiply your money. That's where the power of compounding comes in from. So falling prices are not the right time to sell. Timing the market also never pays. So do not assume that you've acquired good trading skills and play the game. Do not do that. Not at all. Number 6, do not acquire new debt. So do not borrow money. Well, whether recession or no recession, I think borrowing money is a complete no-no when it comes to me. If I want to buy any electronic item, I want to buy a car, I want to buy a property, I mostly pay it all down. If I can't afford it, I don't buy it. Like, I have a very clear mantra in life. No point, buying something and staking your future income into it. So, and creating all that stress that borrowings bring in. I stay away from borrowings personally. And I would invite all of you also to stay away from borrowings. And Uma is saying that you do not acquire new debt in recession. So in an environment of low job security, low demand for goods and services, and high interest rates, high household debt will become difficult to service. So cut back on the debt if you can and live within your means. Abhay Singh, me too, have a different take on this point of stopping investments in risky assets. This is of course in line with investments as taught in this community. Got that? Hinal is saying, I totally agree. Got that, Hinal? Hi Archana, Lara, Diksha, Nishtha, Deepti. Archana is saying, hi, I saw the article on recession by Nirmala Sitharaman. Being hopeful. Got that? Hi Ritika, Hinal, good morning. Moving on guys now to point number 7. She's saying if you are among the lucky ones who have regular surpluses to invest, choose debt over equity. Debt is your cushion against fall in equity markets and an income supplement during tough times. If you stay with the short-term debt, you will also enjoy the benefits of a rising interest rate as central banks tighten money and raise interest rates. Well, again, with the age group in our community, we are all in the age group of 27 to 40. Like that's the maximum strength, right? I don't think at this age we need to be doing debt investments, fixed income investments. I don't agree with this point for our community. We got to do equity investments and we got to keep investing more and more into equity, good quality equities. Okay, again, good quality stocks, good quality mutual funds only, well studied, well researched ones only. So if you're doing that and you're doing that well into recession, when the growth phase happens, you will be the first ones to make money. The rate of return will be pretty high. So yeah, I don't agree with this. Okay, yet again. Reduce your expenses is point number 8, wherever possible to keep the income adequate for essentials if there is any pay cut or job loss that happens. Well, minimizing our expenses is an anytime rule when you are up to wealth creation. 9th is upgrade, update, prepare for an expanded role for yourself. Recession is the time to put all your assets to protect your income and wealth from erosion. If you've invested in debt products and held back from investing in equity, you must pay attention to the human asset and invest in it so any deterioration in value can be checked. So invest in yourself. The more skilled you are, the more you're going to reach your financial goals. So yeah, that's the key. Can you move and build your wealth by investing in your own skill building, investing in your own self? Like, to tell you the truth, every day about 2 hours I spend in just skilling myself up. Nothing else. Yeah, 2 hours every day I spend into the future, building up of that future with my skill building today. 10th point, do not assume it is the end of the world and make absolutely pessimistic decisions. A recession is part of an economic cycle and one has to ride through it until it turns around. Resilience is built when you face downturns, and overconfidence is tempered when assumptions go wrong. There is a time to be conservative with the job, income and investments, and to go on with life with too much speculation and optimism. Focus on survival. The time to rise and thrive will arrive soon after. So again, do not assume it's the end of the world. Do not panic. Do not be pessimistic. At the same time, do not be overexcited or maybe even excited. Can we just learn to balance ourselves? Can we just dance in the uncertainty of the future and keep building one bit at a time every day? Keep it slow, keep it steady, but keep moving to your goals. So, I'm reading further. Our circle of control is what needs action, not the larger circle of concern that involves all the macro questions. So will this war impact? Will that war impact? How will the rise in oil prices do? The rise in interest rates? by RBI. All of this, lot of factors outside our control. What is in our control is something that we can really take charge of. So can you and I together persist towards that? So start typing, guys. What are you getting? What are you understanding? What are you learning today? What's showing up? Abba, you're asking, what is my view on liquidity during recession? I don't know. I mean, the RBI is just tightening the interest rates. With the tightening of the interest rates, more money is going to go out of the market. If more money is out of the market, liquidity is out of the market. Or maybe excessive liquidity is out of the market. So, I don't know. I don't know what will happen. Yes, anytime there is more money in people's hands, it's far more good. But then it also leads to inflation. So when you're asking, should it be amped up? I don't know. There's an impact to everything, right? And Abha, which impact do we want to be responsible for now? That's what's we've seen. Hinal, no debts, be persistent. Got it. Yes, it may be painful, right? Because in the short run, you and I are not taking on debts to fulfill on our desires. But yeah, this is it. This is what's needed. So everybody start typing, what are you taking away? And everybody, if you're here, you've not acknowledged that you are here, do leave comments. I want to know that you're here. You can even write, hi Priyanka, hi community. So all of you who have not acknowledged your presence, make sure you do that. Archana, be in control, continue studying, continue with equity. Neha, I have working capital debt for my business. Okay, is that fine? Yeah, working capital, right? To make the business going. You've taken that debt. The sooner you pay off, the better it is. But if you see that you've taken the debt at a certain rate and the returns that you generate by leveraging that debt in your business are much higher, then it's fine. You can just keep persisting. It just depends on how you view it. Hi Kalpana, good morning. I'm glad you finally said yes. Hi. Okay guys, so on this note I'm closing the live. Thank you for participating. Take care of these rules and make sure you grow financially. That's what we're committed to. Abba is saying my take on recession related preparation is, firstly, not to panic, be persistent with your investments and efforts to upskill. Preeti, go about your regular investments if you're able to, and at the same time ensure that your expenses are in check. Stay balanced in your outlook and approach. Got that, Preeti, love that. So thank you so much everyone. Take charge, stay safe and keep coming back for your financial growth. If you're benefiting from what you are learning here at Women on Wealth, I invite you to share it with people in your life. Share about the work, share about our courses with people in your life. Share how you've benefited from the courses and the lives here and bring them in. It's one woman at a time that we build 50 lakh financially educated women by 2030. Take charge, stay safe, bye-bye. Preeti, thank you for sharing the video. Loads of love. Bye-bye everyone. Good day.